Hey everyone, welcome back to the channel. Today we are talking about the July 2026 Canmore Real Estate Market. Going to go into detail as we usually do. Let's start off with talking about what we saw in Canmore as a whole. So we saw 42 sales in July. The average sale price was just over 1.2 million. The average square foot price, $837 a foot. And we saw an average days on the market of 67.
For Banff, we had two sales. The average sale price was 1,157 and change, $843 a square foot, and 31 days in the market. We didn't see any activity in Deadbands, Lac des Arcs, Harvey Heights, or Exshaw.
Yeah. Okay, let's move into the specific sectors because I think this is where the data gets a little bit more interesting. So for single family homes, we have 32 current properties on the market. We had 9 sales in July. The average sale price was just shy of 2.2 million. The average price per square foot was $735 a foot, and we were selling on average about 66 days.
Townhomes, we had 34 sales or 34 active inventory, 14 sales, just over 1 million was the average sale price. $656 a square foot and 54 days average on the market. Days on the market.
Oh, apartments were leading the way in inventory with 52 active apartments. We saw only 11 sales in July, so a little bit of a slower month there, all things considered. The average sale price was 846,000, and the average price per square foot was basically $800 a foot. And those took an average of 93 days on the market. So definitely our slowest sector. That doesn't mean that's every apartment by any means. Obviously, the Spring Creek stuff seems to be moving pretty quick. But just as a whole, that's kind of where we're sitting.
Yeah, percentage wise, it was down a little bit. Half duplexes, 8 on the market right now, and we don't have any sales to report for that month.
Mhm.
Hotel condos, so into the investment market, we had 11 hotel condos on the market, which is when we'll talk about this inventory has been really low. 4 sales, 1.1 was about the average sale price. $1,378 a square foot. So the square foot price has jumped. And I think that has to do with inventory and the timing in the market. The average days on the market was 53 days.
Tourist homes, more unimpressing things here. Two active tourist homes we have
Mhm.
today. That's it. We had 4 sales in July, so they come, they go pretty quick. The average sale price for those was just over $1 million, and the average square foot price was $1,263. So, and they sat on average for 59 days. So, again, the short term rental market continues to, I don't want to say disappoint because it's not disappointing at all. What's disappointing is that you can't sell more of them
Yeah,
because there's not a lot of resale properties on the market, which is crazy because to me, it seems like there's been a lot of inventory, new inventory that's come. And we have a decent amount of existing inventory as far as just them existing. They're just not for sale.
right.
So, yeah,
I
I don't really know why that is.
Correct. I think too, one thing that I notice when I look at this, when people might that follow us might look at the average price per square foot and go 1378 and 1263. Like typically, tourist homes are worth more, and but I think this is just a sector of the market right now where there's been more hotel condos available, and that has shot the price up.
Mhm.
Because especially the used inventory, right? Like the stuff that's coming to market is getting a ton of traction and even multiple offers, which drives the price up. So if you've followed us and you go, well, wait a second, tourist homes, you guys talk about tourist homes being worth more from a value perspective. Um, that could be true on certain sections in the market, but what this does tell us is the inventory is what's driving price here on this particular sector.
100%. And
Yeah,
obviously all of the new product that's come to the market and got the smaller square footage, and the square foot price is selling for a crazy number.
yeah,
That's all hotel condo zone properties. Um, so that's obviously kind of what's
correct,
changing that.
correct.
Um, let's talk about some year to date statistics. We'll go back into talking about some different individual sectors there, but 2025 sold listings year to date was 280, and in 2026 is 274. So again, we're basically seeing a very similar occurrence as what we saw last year. And this is going to continue on, but the 5 year average is 310. So a little bit below the 5 year average, but very similar to kind of what we've experienced in the last, 24 months.
Yeah, not crazy. I mean, I think over the 5 year average is pretty level. End of month active inventory, so 148 in 2025 and 145 in 2026. What I like about when we get into, July, June, July, August, we start to roll over the half of year
Hmm.
when we're looking at year to date stuff. So it gives you a very good idea, right? Like
Yeah.
when you look, sometimes when you're looking at year to date and you're talking about January, February, it's really tough because some anomalies can happen in those months to change things. So, end of active inventory is basically level at 148 and 25 and 145 this year. And the 5 year average is 139. So we're right on the same level as the 5 year average.
Yeah. And then that's going to continue to reflect in the average sale price when we're just comparing the last 2 years. So
Hmm.
in 2025, we were just over 1.3, just over 1.33. And in this year, we're basically 1.32. So I think that we're basically the exact same. I don't think people should look at that and go, if we're not appreciating,
No.
we're going the other way, because I don't feel like that's the case at all. And then again, obviously the 5 year average is 1.168. So well over that. I think that works out to being about a 13% difference. So um still some really good numbers there. I think we can kind of get into talking a little bit more so on, you know, I think we can try and have a conversation here that maybe, doesn't sound kind of the same, even though the market's been the same as we've seen over the last couple months. But I want to talk a little bit about maybe like the dead inventory that's out there. And maybe you want to touch
Hmm.
on this a little.
Yeah. So, what we mean by dead inventory is inventory that sits for a really, really, really long time, right? In the numbers that we were looking at, we had one listing there that was, I think, 514 days, which can skew the numbers, right? And so when we get dead inventory on the market, it makes it feel like there's a ton. The days on the market and these things tend to creep up when there's dead inventory. And what we mean by it is inside of dead inventory, or inside of the market today, there's still been a ton of activity if you're
Hmm.
priced correctly.
Hmm.
So, the dead inventory is just stuff that's been on the market for a long, long time and,
Yeah.
tends to sit there.
Yeah. And it's, there's different reasons that can cause it. Mainly it
Hmm.
comes from overpricing it, because Canmore is a place where if things are priced properly,
Yeah.
they sell, right? They don't just sit if it's priced properly. Now, sometimes it's hard because something's been on the market for a long time. Then you get into that proper price range or very close to it, and it still sits because, again, people then are going, well,
What's wrong
why
with it?
hasn't it sat? Yeah.
Yeah.
And they see
Yeah.
the days on the market and they don't necessarily see the price change. They just see what the current price is, right? So they're like, that's weird. So
Well,
that's an
it's
important thing
interesting.
for sellers to know.
Yeah, it is because you and I had a conversation with a client, potential client, some time back there, and the first thing I think he was interviewing us, and the first thing he said is, "Well, you realtors, all you do is talk about price drops. All you want to do is price drops, price drops." Well, yes, I understand that that's the way some realtors come across about it. But ultimately, if your place is priced within the market, I'm not talking about being underpriced. There's some strategy and value in that we could talk about and we can go into at a different time. I'm just talking about within the market value pricing in Canmore. If you are priced, you will sell.
Yeah.
If you are not, you won't. And you may end up selling for less than you would have had you have priced it properly because it goes stagnant. If your place is worth $1 million and you price it at 1.2 because you think the market can bear it and it sits and it sits and it sits and you finally drop it to the $1 million mark. Well, it's not worth $1 million anymore because of what the the market has decided the people in the market have decided that whether there's something wrong with it or I don't know, but they 99% of the time properties that are overpriced and with price drops, and I'm not talking about quick price drops. There's some strategy in that as well. I'm talking about being on the market for 200 days and then a big price drop. People start to go, there's something wrong with it, or
Yeah.
I'm not going to buy it, So
Let's wait and see what happens.
exactly,
Yeah.
exactly.
Well,
So,
and I think that it's a little bit different because it's, I find a lot of the times sellers have an idea of what their property is worth. And we've lost listings because of this.
hmm
And, you know, uh, and it doesn't matter to me. Like I'm all for people being comfortable and doing what they want to do. But
hmm
if we're going to be as honest with people as possible, so we're going to give them a price range if they want to sell, right, which is what most people are wanting to do.
yeah,
Sometimes sellers get a little bit in their own way and they think their property is worth substantially more, um, and then you'll get an agent that'll take that listing and then all
yeah,
of a sudden they're just suggesting price drops all the time, and not always the case. Sometimes the agent comes in and suggests the price and it could be wrong, but they're suggesting price drops and then all of a sudden
hmm
the sellers are getting flustered and they're going, well,
yeah,
realtors, what do they even do, right? Like they're not
yeah,
selling my place, they're not.
yeah. Just a little technical difficulty. We can just keep going there. Parks, you were just talking about, how potential clients and price dropping and those types of things that can end up, affecting sometimes what the public perceives realtors. They don't do anything, that type of
Yeah.
thing. And so,
Yeah, so I mean it can be tough, right? I mean, there's not necessarily a crystal ball. I think that
yeah,
a lot of it depends on what the seller's motivations are, um, in their process and how they want to approach it. So,
yeah,
do we want to get into talking about some of the short-term rental stuff? I know we just kind of touched on it, but um, I think that with the resale market, I think it's something that people need to pay close attention to. Obviously, we don't have a ton of it on the market right now, but I think that a lot of the new pre-construction is getting obviously a lot of the hype. We've talked about this for a few months now, but I
yeah.
think that there are some really, really good resale opportunities. And that market, surprisingly enough, is moving very fast. And that's because we have no inventory. So
hmm
these properties that are coming up in the Stone Ridges or the Spring Creeks, if they're again still priced properly, they will see multiple offers. And that doesn't necessarily mean that multiple offers are what it was 3 years ago, where it was just people weren't having conditions and prices were going insanely over asked. But what it goes to show you is that there's multiple buyers that are just waiting for this product to come to the market. And we've been waiting for months. And so when it hits, you've got to be ready if you want, you know, to succeed.
I think that's the biggest thing for me that I would like to get out to our database of people that follow us is there's enough information on short-term markets and this type of stuff. What what I would encourage people to do is if they are in the market, whether you're talking to us or somebody else, is be prepared. Be
Mhm.
prepared because we are in a market, as you say, where there are multiple buyers. We're not seeing like things crazy over ask in multiples necessarily. That's not always the case. But if you are not prepared and you go into a multiple, and sometimes it's clients have to go through it a little bit to understand what preparation makes means. We can help you through that as much as we can. But if you're not prepared with, your financing, knowing about maybe pre-doing some condo review stuff, um, and knowing exactly what buildings you want to be in and don't want to be in. The more you're prepared, the better chance you're going to have because there are multiple buyers that are in the market right now.
Yeah, for sure. And I think the best kind of analogy that we can try and explain this to both buyers, sellers, and investors in the way that the market is right now is if and this is kind of cheeky and lame, but it's a good kind of way to really dumb it down and try to understand it is if you have,
Hmm.
let's say, two apples for an example. One apple, they're the exact same. One apple's priced at $1.90 and the other one's priced at $2. The way that we're in the market that we're in right now, people are always going to explore the $1.90 apple first, but they won't be afraid to pay $2 or maybe even a little bit more for the $1.90 apple. So
Hmm.
it's all perception. And then there's also the luxury market of, let's just call it the $3 apple, where things maybe take a little bit longer to sell, but there's still that demand there. It just
Hmm.
happens differently and it's not in the same conversation as the people who are buying the $2 apple, right?
Yeah.
So
Yeah.
that's the best way of explaining this market to somebody and why pricing matters and
Hmm.
the mentality that buyers have right now. Um, and it's not that we have a substantial amount of inventory. I do think that like the apartment sector and is a little bit flooded a little bit when it comes to the Pallisers, the that type of the apartment
Yeah.
market. There seems to be a lot of it, and it tends to take its time a little bit more. But in general, there's not really a ton of inventory. I know we talked about a rise in
Hmm.
inventory, but that's starting to kind of disappear.
Yeah.
Um,
Especially if you're
and
priced properly.
yeah, and well,
Yeah.
that's just it. There's a lot of there's a decent amount of inventory that's sat on the market for a while. A
Yeah.
prime example is the average days on the market for um, the active inventory we currently have across all sectors is working out to be in an average of about 130 days on the market.
Yeah.
And that's including stuff that's been listed within the last, week for that matter, right? So there's
Yeah.
a huge discrepancy in what's there. So it doesn't feel like there's a lot because there's a lot that's been on there for a while that people have now just kind of not even forgotten about, but just lost their focus on, right? And they're all
Yeah.
just focusing on this new market that has maybe what do we have? Maybe like 30 to 40 properties ongoing of stuff that's active that's actually catching people's
Moving.
attention
Well,
and
42,
moving.
right? We had
Yeah.
42 selling last month. So
Yeah.
yeah.
So
I think
I think
in all of that, in saying all of this, is not to put fear into anybody. Where we're at is stable,
mhm,
100% stable.
yeah.
Um, the market is not in favor of either the buyer or the seller. It could be in favor of either one if you price properly.
Yeah.
From a seller's perspective, and be on the offense. And then from a buyer's perspective, if you're prepared, you could definitely be in that type of market. But we're stable going into the foreseeable future, I think.
Yeah, I think that's a perfect way to explain this market right now is the last couple months we've been pretty balanced across the board, whereas now we're using the word stable, which is basically balanced, but realistically that's just because it's somewhere in the middle. There's
Hmm.
a current buyer's market and there's a current seller's market, and it just depends on how you're pricing things and what you're buying,
Yeah.
because there is a little bit of a buyer's market going on out there, and then there's also a seller's market,
Yeah, 100%.
which is why we're calling it in the middle.
Yeah, we're
But
stable in the
realistically,
middle.
there's nothing that's really in the middle.
Yeah.
So it's it's just, what side do you want to be on at the end of the day, right?
And how do you be prepared to be on that side, right?
Yeah.
So, I mean, Canmore, we're still a very healthy real estate market,
Yeah.
and being that Canmore is so desirable, the you know, we're not slowing down.
Yeah.
Yeah, yeah,
Yeah. We're not slowing down. I mean, anybody who's here can see the increase in tourism every year. And not only that, but like the development that's happening. I mean, the gateway, the stuff that's going up at Smyth Creek, obviously all the new short-term rentals, like it's just it's not it's not slowing down. So I think it's
no,
still
it's not.
um a very good place for people who have their asset here to, maybe see the number of the average sale price and go, oh, that's weird. Like
Yeah,
I wouldn't panic over that at all. So
no,
um yeah, I think I don't really have anything else to add. I think we kind of got across the points that were important for people to understand this month. And I think it'll be interesting to see how the rest of the year plays out, especially now that there's, what is there, 5 months left. So, um, a big 5 months to see kind of how the year overall performed,
yeah,
and to just kind of go from there. But we'll obviously keep coming at you guys with some monthly updates. If you don't have anything else to add, then I think we can kind of just wrap this up, and we look forward to chatting with you next month.